David, thank you for being here on Capital and Power. I want to read a quote back to you in which I think it describes some of the things I'd like to talk about today. And the quote is, "It is far too easy to lose passion for that which has enabled our abundance and prosperity when we are so engulfed in the blessings of our abundance and prosperity."
Yeah.
And this came out of your book from 2020. There's 2021. There's no free lunch.
Yeah.
I think I clearly understand what you're saying, but let's talk about that. What were you intending to tell people with that?
I think that there is a sense where what is embedded into the blessings of free enterprise are the very things that sometimes can undermine it. It's actually a point that Joseph Schumpeter himself, a great early 20th century economist, said is that sometimes embedded in capitalism are the very seeds of its own undoing. Markets work so miraculously, so effectively, and sometimes so quickly that we don't see the effects of markets as transparently and as vividly as we see other things in our lives, and it enables us to take them for granted. And so the plenty that we enjoy, the abundance and prosperity we enjoy as a society that is a byproduct of a healthy market economy, it's very easy to take for granted. Many of the things Adam Smith referred to as the invisible hand have happened so quickly and, yes, so invisibly that it's easy to take it for granted.
And I should point out, when I was discussing with the team guests for Capital and Power, I said I wanted to have someone like you to talk about the real world issues we face, not only in New York City, but nationwide. And the reason I say New York City, I love this city. I left a very good job 20 years ago, sold everything I owned, and I moved here because I was still able to do that at that point in my life with nothing, because I wanted to be here, built a life. We're about to elect in this city. It's not a guarantee, but it looks like it's going to happen. A man I refer to as a communist, he says he's a socialist. If you read the Democratic Socialist preamble, it's clear who he is.
Yeah.
We're about to elect somebody. And what I say to my friends who I disagree with about voting for Mr. Mamdani on his policies is we agree on the same things, that we need to address poverty. We disagree on how to do that. And so let's start our discussion there. What would you say to my friends and to the younger people in my family who would vote for this individual as to why that might not produce the best outcome?
Well, I agree with you in the setup that there are a lot of people that are in agreement over certain problems that need to be solved, and then the disagreement comes down to the solutions. Now, I don't want to be overly charitable about that, because some of these disagreements and solutions are disagreements that have already been adjudicated by history. They've been adjudicated by reality. And some of the things that Mamdani represents and supports are things we ought not to be still having to debate. But we are. And the politics of it's very different than the ideas behind it. Politically, there's always someone who's frustrated, so they're willing to try something different, including bad ideas. You know, politics deals with the masses, and not everyone in the masses is going to be on board with good ideas or the lessons of history. That's fine. Exploiting those things politically is very common as well. It's one of the reasons I don't really care for the political side as much as I do the economics and the philosophy and the ideas, because I think politics forces you to have to be more transactional and pragmatic than I'm wired to be. Mamdani seems to me to be a real believer. I think a lot of people that talk the way he does are posing, but I think are cosplaying. But I think that, like Bernie Sanders, who is a supporter of Mamdani, I think he's a real believer. And he's a real believer in very bad ideas. And I think that the way to beat that is with debate and persuasion. And we have no shortage of arguments available for those of us who believe socialism is a failure, Marxism is a failure. Mamdani has even other problems outside of his failed economic agenda. You know, his views on law and order, crime, homelessness. Israel. He is not restricted to just economic worldview for his impairments, but nevertheless, we have a fight in front of us as New Yorkers, and I believe you're right that he's going to win. And New Yorkers are sometimes, much like the famous line that Churchill said about Americans, they're usually willing to do the right thing after they try everything else.
Well, I'm going to keep coming back to the book and this theme. There are 3 quotes I pulled, and they're from early in the book. But one is, you talk about trends that we should resist. And perhaps every generation goes through this, but you refer to the mystifying movement towards greater collectivism as a means of improving the needs of the underprivileged. I have relatives who are 26, 27 years old. They're going to vote for Mr. Mamdani. I don't argue with them. I say, what specifically is this individual going to do that's going to improve your life? What policy is going to improve the lives of the people around us? And they can't answer the question. They throw out the platitudes and they throw out the grandiose policies, but the real world implementation doesn't seem to get to them. So how do you reach those people?
Well, again, I do believe that it requires earnest conversation, an acknowledgement of what the problems are, that we do desire a higher quality of life for people, but then getting into the solutions that we think are most likely to create it. You're quoting a couple times from my book, There's No Free Lunch. But the whole aftermath of me taking on this real passion for defending markets and defending free enterprise connected to a moral foundation. It's the cause I intend to live out for however many decades I get blessed with remaining on planet Earth, is a byproduct of the financial crisis of 2008. I think that was a moment that history changed, because many on the right were willing, they weren't worried about a fight over Mamdani and bad policies he'll have, because in the 80s and the 90s, you could just take for granted that everybody knew markets were more efficient. Markets were creating better outcomes for everybody. And I think that our unwillingness to tether that, there was an Ayn Randian thread that greed, selfishness was a virtue. The Gordon Gekko line in Wall Street, greed is good. The fact of the matter is that we have to, with the types of people you're talking about, the family members that see Mamdani as at least caring for the poor and underprivileged, we have to make our argument for free enterprise that it respects the dignity of the human person, and that collectivism and socialism do not. And that the right solutions to poverty are not merely to give someone food, but to give them food and dignity and purpose. That's what honors them as a person.
So let me just give the people who are watching, because you've just kind of outlined where we're going with this, and you've been talking, I've been watching some of the podcasts you've on purpose. We're going to talk about the role of work. And some people think work is just the way you get dollars or fund tickets to buy the things you want to do. Others would say that our work and our purpose are central to who we are as individuals. We're going to talk about that. We're going to talk about the moral part of all of this. Before I even throw the next quote at you, which comes from a podcast you were on, let's back up. You never went to college, did you?
No, I did not.
And you manage over $7 billion and create wealth for people.
Over 8 billion, but who's counting?
For who's counting? Listen, that's far more than I manage. I just manage the family finances. But congratulations. But there has been, I grew up in an era where everyone was told, you have to go to college, you have to go to college. And my mother, still with us, thank God, used to say things like, there's no shame in poverty. A very good friend of mine said, it's just as easy to marry a wealthy woman as it is to marry a poor woman. Choose the wealthy one. These kinds of things that we grow up with. But the fact is, you don't have to go to college to make it in a country like the United States. And yet, there is still this push to put people to college. And I think it misses the point that you've been raising, at least from the podcast I've been watching, about purpose and then some kind of connection to a moral foundation. Just going to college doesn't make you a moral person.
Sometimes it can very much undo you being a moral person. College, I wish college was simply just lacking in the addition of a moral compass. I think the indoctrination and the lifestyle that exists on American college campuses, it almost always is doing something quite similar to the exact opposite. It's very counterproductive to moral formation. I don't wish the circumstances on anyone by which I ended up not going to college. I have a very educated family. My father had a PhD from USC. I was a renowned Christian intellectual and philosopher. My mother has a doctorate from Vanderbilt. These were educated people. But my dad died at 47 years of age, and I was not able to go to school. My mom was already gone. And that was the way in which I entered adult life, was without those resources financially or time-wise. I had to go start life. And yet it was the advice of my very educated dad with a PhD and 2 master's degrees and a summa cum laude intellectual guy who said, never go to school because you believe you need it for a living, and never go to school because you believe it guarantees you a living. It does neither such thing. I believe that there's a lot more people now that are on board with that way of thinking than there were then. There's a lot in the kind of technology world that are somewhat anti-establishment about higher education. And there's people like Pete Thiel and Elon Musk, who are both very educated guys themselves, but they kind of celebrate a sort of iconoclastic approach. There could be a lot of technology talent that didn't require the formality of higher education. Entrepreneurialism has never really required higher education. There's always been a certain amount of risk-taking and street smarts that has made people successful in certain business endeavor apart from formal college education. But in finance, it's very rare. And they put up as many barriers to entry as they can now to keep it from happening, that as almost a filtering mechanism. A lot of professional services want to see not just college degrees, but advanced degrees and so forth. So I had to overcome a lot of that. And I'm very grateful that I did. My life didn't start off the way I wanted it to, but if I had gone on to a good school and gotten a business degree and got an MBA in finance somewhere, I'm sure I would have had a good life, good career, but it wouldn't have been anywhere near as rewarding or fulfilling as the life I ended up having has been.
What drew you to markets, to finance?
Alex P. Keaton, when I was 8 years old on Family Ties. I grew up watching that show, and I was reading Bill Buckley and National Review in first grade. I was already a very Reaganite person in terms of my own, kind of like worldview and DNA. So I was not obviously a very cool kid, but there was something about that character on Family Ties. I didn't know what he did or wanted to do or talked about, but the idea of putting on a tie and holding a briefcase sounded like something I wanted to do. And then as I got older and read more economics, the desire to attach economics in the idea realm to markets in the practice realm always appealed to me.
When people described you, what did they get wrong? Because I mentioned to friends I was doing this interview and I heard some things, and I will share one of them, but how would you describe what people get wrong when they hear your name?
Well, I guess I don't know. For one thing, I will say one of the advantages, to having money that my dad never really had is I don't have to care much what people think. But I think that probably some people would be surprised at how devoted to my family I am. I work so much that I think they'd be surprised how incredibly tight I am with my 3 children and my wife. But I don't know what people think about me, to be honest.
The one that brought a smile to my face, because I have a wide circle of friends, and I think I joke with my brother. I have two older brothers, but I joke with one who hosts Thanksgiving that I'm going to be the crazy uncle this Thanksgiving who says the things that the younger kids go like, no, that's not how the world works. And I'll be like, yeah, it is. A friend said, oh, he's the crazy Christian.
Oh.
And I said, well, I'm not sure exactly where that comes into a discussion with someone about finance, but what is my friend getting wrong about you?
Well, your friend's right that I'm a Christian, and your friend may be right that I'm crazy, but I suspect that they are trying to connect the two things together. And whether it's tongue in cheek or not, I do, like every person, have a belief system that governs the way I live my life. I just try to be very self-conscious about that belief system instead of spend my life denying I have one.
But so that we got into a discussion, and my friend was misquoting, I think, New Testament, but was using the rich person getting to heaven with the camel through the eye of a needle.
Yeah.
And I said, I think you're misinterpreting. I think what's being said there is don't love money. You can be rich, but don't make that the sole focus of your life.
Yeah, the Bible goes a lot further than your friend's even suggesting. New Testament and Old Testament, not just merely condemning idolatry of money or the love of money, condemning any idolatry. The very first commandment in the 10 Commandments that many school kids learned, that many people, even if they're not a Christian like myself, people are familiar with the concept of the 10 Commandments. The first one is, thou shalt have no other gods before me. And so our wife can't be our God, our country can't be our God, our children can't be our God, our money can't be our God. So yeah, I'm with your friend in being opposed to the idolatry of all things, not just money.
So how do you apply that? Look, we're a financial investment platform. I think some people say, what are you doing talking about issues like a creator or God? But how do you apply that when you're making decisions, the moral code that you embody in making choices about investing? How does that play into your thought process, or does it?
Well, it does very much. I would suggest it does for everyone, even if they claim to be irreligious or anti-religious or a-religious or whatever. Everyone has a belief system. Everyone has certain things they believe about reality. So this isn't a religious discussion. It's a metaphysical one. I do not shy away from the fact that I have certain truth commitments, truth assumptions that guide what I do. Now, when I'm investing capital on behalf of clients, I do believe not only in a moral code, which most people would say, don't rip people off, be honest, be hardworking, sort of generic moral platitudes. That's kind of low bar, if you ask me. But what I also do is try to understand why I believe what I believe about managing money. Why do I believe that the profit motive works? Why do I believe in a division of labor? What are the tenets of classical economics that have created incredible wealth for civilization over the last 250 years? What is the ideas behind those principles that I'm committed to? And how does that play in then to the way humans act in enterprise, which of course is ultimately what we're doing in investing capital. So we're using financial instruments to capture human activity that we believe will embody a return on that capital. And I believe that me understanding why those things work the way they do gives me a very big advantage as an asset allocator. I believe humans act because they were made a certain way. There's certain rational and moral faculties that we all possess. And I believe that there is something embedded in the free enterprise system that honors human dignity and human freedom and human capability, our capacity to be productive. What a lot of capital allocators do is they still believe that there are sort of these impersonal, atomistic math and science theorems that are driving return on capital. And there just aren't. Now, there are math and science theorems that measure the return on capital, but all return on capital is a byproduct of human action. And a capital allocator can believe that and not believe it as the same reason that I do, and that's fine. But I don't think most capital allocators are trained to think about the why. And that sort of contemplative life may be something I inherited, even though I didn't inherit money. It may be something I inherited intellectually from my late father, but I try to contemplate why those things are. And I do believe it helps make me a better capital allocator.
Okay, so quote from the book, and then a great quote about income inequality. You alluded to it earlier in our discussion, but from the book, we care about economic growth because we care for the human person, and the human person can flourish when they are free to grow and prosper. What optimizes this aim is my desire, and what impedes this aim is my enemy. Is Mamdani your enemy?
No, I mean, in a sense, there's semantics there. If Mamdani is putting up policies that are impeding economic growth and impeding an opportunity society, then he's performing like an enemy in that sense. But it kind of is a distraction. His ideas are the enemy. The ideas of collectivism, of trying to claim that income equality is the goal of economics as opposed to flourishing. That if we could all be more equally less prosperous, that would be better than a greater opportunity society that honors dynamism, that honors people being able to elevate their station in life. So yeah, his ideas are my enemy. And the ideas of Karl Marx are the American enemy. They were the great American enemy of the second half of the 20th century. That's not a very controversial statement.
Okay, I didn't want to get to this quote, and I'm almost out of quotes, so
Yeah.
people watching don't have
not
to
really. The book has 250 of them.
Yeah.
So.
Well, I'm a bull to the red flag when I see certain things, and this one jumped out at me. Lenin and all socialist, Marxist, collectivists fail to understand that man is created in the image of God. Business cannot be reduced to the commoditized functions of technocratic operations because business flows from the creative spirit of mankind, and the creative spirit of mankind comes from our status as image bearers of God. How does this play into investing, though? Because I keep hearing, again, I have friends who are much smarter and much more financially successful, as I don't know the right terminology, but they would say that finance and investing is all about the incentives. That's not what you're saying here.
No, but why is it about, even from one who claims it's all about incentives, why is it about incentives?
It's a great question. I don't say that. I think there's pleasure
I think that
in it.
understanding incentives requires us to understand the human beings that are being incented, what is incentivizing. And it requires an understanding of the rational faculties that we are made with. Now, I don't believe that all created beings, let's say the animal kingdom, respond to incentives the same way. But I do believe human beings do. And I only believe that about incentives because I believe that we are dignified, elevated creatures. Basically what you just read, that we were made in the image of God. It's a theological statement. But we're all capital allocators that don't share my worldview, don't share my theology, can agree, is what I'm critiquing is Lenin's comment that all that it takes to run a business is a calculator. That essentially anyone who can do basic arithmetic can run a business. So if you believe, as most modern economists have decided, that economics is essentially a spreadsheet, and that they're econometric figures, that if we could optimize and turn the knobs the right way, and who's supposed to be turning those knobs? Central planners, bureaucrats, etc., either governmental power players or faculty lounge, academics. Then they end up with a view. How can an investor make the right decision if they believe that executive talent doesn't matter as much as arithmetic? But that is what Lenin believed and explicitly stated. My belief that as a bottom-up stock picker, that I need to understand management and the C-suite and the talent of the people that are business managers, that matters. I believe that because of the very point you're bringing up now. Those who believe all of that stuff just gets washed in the end, and you're turning a few knobs on a spreadsheet to figure out the optimal investment. I think that they sort of accidentally have a more Leninist view of economics.
I want to ask you about economists and where we are in the world today, but I have to add, because you brought up, making decisions about investing. Can you walk me through the process by which you and your team, and please feel free to work in that you look to hire people who are poor, what was it? Poor, smart, and desperate.
Yes.
I would say just motivated, but PSD can work too. But what is the process by which you choose? Because we have at A Invest, we offer tools for people to do data chunking, ask our AI agent natural language questions. But I don't think you would use our tools. I think you would have a different process.
Oh, I mean, we use a lot of tools, and I would be happy to get familiar with your tools. I think technology tools are very important. The issue is that we use technology to create more efficiencies around what we believe to be human processes. And technology enables a lot of things to go quicker and to present a lot more information. But I believe in the process of human wisdom and adjudication in interpreting data to make good decisions. And so I believe if I were in medicine, I would believe in a highly technologized manner of collecting data and scans and information, but I would still believe in a human wisdom assessment of the data.
So what's when you look at an asset to either acquire or pass, what's the process for you and for your team?
So it depends on the asset class. We have, about 4.2 billion of our 8.1 billion in what we refer to as dividend growth equity, and we manage it entirely in-house. And so it's bottom-up public equity selection. The portfolio has anywhere from 25 to 35 names at any given time. We've never been over 35. We've never been under 25. So let's call it somewhere around 30 stocks that we are buying on the basis of their ability to sustain a growing dividend. And so it is very bottom-up oriented. And the research analysis, the trading, the analytics, the entire process is insourced inside our firm. I've been managing that portfolio for a very long time. And so, it is a combination of both quantitative and qualitative assessment. You start off with an investable universe that you have formulated through screens. And so you're using quantitative metrics to eliminate, but then you get to a place of candidates, and then you have to do a very qualitative assessment. And we are looking for the propensity of management, the cultural inclination to continue growing the dividend. So you could look at a company as the free cash flow, that they can keep doing it. They have the history that they've done it. They have the leverage ratios that give them bandwidth to continue growing a dividend. And yet, until you've really analyzed whether or not management believes in the dividend, wants to pay the dividend, there's been a lot of management teams that pay a dividend begrudgingly.
Yeah, how do you determine, is it in the earnings call? How do you determine if they're paying it begrudgingly?
Well, it's a fallible process because we're making a judgment call. It isn't that we feel we can know with total certainty, but for one thing, a lot of management teams that are paying it begrudgingly tell you they're paying it begrudgingly. So that helps. That makes our job pretty easy. Most of them don't go out of their way to hide it. But when they are looking for big M&A deals, when they have prioritized the cosmetics of share buybacks over the actuality of dividend payments, you get a chance to know what people really believe in and are doing. Reckless M&A is one of the great tools of corporate managers to avoid actually returning capital to shareholders responsibly. So it's a quantitative and qualitative metric that's very proprietary for us, but has created some phenomenal results we're very proud of.
When I listen to people, and you're on these shows as well, CNBC, Bloomberg, when I listen, it's rare that I hear my former colleagues, I used to be one of them, TV journalist, ask about dividends. When did dividends no longer become sexy? It would seem to me that's actually the focus, is whether you're going to make an investment. And is there a long-term history of the dividend being paid, or has it been paid, or has it been suspended? When did that fall out of favor? And how do we get back?
I think largely in the 90s, where the Silicon Valley success story of the 90s, it not only made dividends feel obsolete, but it made them feel kind of subordinated. Like that sort of Buffett factor or value factor in the late 90s, you got scoffed at for thinking about a PE ratio. You got scoffed at for thinking about a dividend. You got scoffed at for even thinking about profitability, because everyone knew that all you needed was the next .com to do another raise, and you would get a capital return by realizing a gain on an immature asset, or by holding an immature asset till it became a mature asset, which exposed you to an awful lot of risk of who the survivors would be. And if all you bought was Google and Amazon, well, you did very, very well. Now, that also assumes you would ride out, in Amazon's case, I think a 90% drawdown at one point. And Apple has had multiple 50 to 70% drawdowns, but some people did it. But the bigger fallacy is that that's all that would have been in somebody's portfolio. Whenever people talk about Meta, Facebook in the social media world, if you said, look, I just knew social media was going to be huge, I bought Facebook, look at me now. But what if your portfolio had been filled with MySpace, Snap, Twitter, even Twitter, even with Elon Musk's bailout of it, it sold at significantly lower than it had traded at its peak. Its CAGR was very, very underwhelming. Snap has set more money on fire than people are even willing to talk about. So, Meta's been a generational success story. But I think that those 1990s tech deals made it very hard to be proud of dividends. But if you look at the companies from the 1990s, the Qualcomms and Cisco's that were the darlings of the 90s, they've all, even Microsoft, they've all become big dividend payers now.
I want to switch to a subject which will reinforce the fact that if you give me $1 million, I'll turn it into $10,000 very quickly. That would be my success rate. Cryptocurrencies and the people who are using cryptocurrencies to build their portfolios. What do you say to those folks? Because I don't know what your philosophy or your thoughts are on the Bitcoins of the world and now the use of stable coins to allow for a leveraging up of cryptocurrency asset classes.
I don't consider it an asset class, and so I don't have anything constructive to say. I don't allocate whatsoever to it. I have no problem at all if somebody does. And if it goes much higher and they sell, then I'll be really happy for them. But I do not invest where there's no internal rate of return. I cannot value it. I find the explanations for how value will be created to be intellectually incoherent. But that is very different than saying that speculation can't be profitable. With the right buy price and the right sell price, any speculation can be profitable, but I have no interest in doing it as a fiduciary.
We can leave it there. That is a good headline for us. But let me ask you this as we switch back to investing and wealth creation. I think a lot of people think this is something that happens quickly. What do you say to people who say you have to have a long-term time horizon or you should have a short-term time horizon? How do you gauge or how do you hold the hand of people who might be impatient? How do you hold the hands of people who might be willing to wait too long?
Well, we just talk to people realistically. I mean, my goal is not to tell people what their timeline should be. It's to tell them what it is in the context of their capital and what its resources will create for them. So if somebody were to come to me and say, I have $1 million and I need $250,000 a year in income from that million, so how can we make that work? I wouldn't tell them, well, here's my plan to get you 25% per year. I would tell them, here's why you need to change your withdrawal strategy, my friend. We believe that trust is built by telling people the truth, even when they don't want to hear it. And if we tell people the unvarnished truth and they don't like what we have to say, then they won't be a client of ours. And that's okay. But when we talk about timeline, people can say, I want short-term returns. We will talk to them about the way in which the capital markets that we're invested in are long-term assets. They have a long duration, and yet here's what we expect will be able to play out over time. So there are different needs that different clients have in terms of their own objectives around wealth transfer, wealth accumulation, preservation. There's a lot of different objectives a client may have. And we have to talk to them about their own goals and objectives, but we're not going to make the capital, we're not going to use the capital as the Play-Doh to try to make it different. We're going to use the goals to adjust them into what reality represents.
So looking at the U.S. stock market right now, if you watch, as I do, the different Tower of Babel, I'll call it, broadcasts, so everyone's screaming and saying, essentially, though, the same thing in different ways. Where do you think we are right now? Because the article I read this morning, and it's always in the context of if the AI bubble pops, then this could happen. And I'm thinking to myself, this is the social media of linear media. Why waste your time with the ifs? Where are we right now, in your opinion?
Well, I think that ifs are an important part of conversations as long as they are leading to a risk-reward trade-off calculation. There's ifs on both sides of this, to be fair. Someone could say if the AI bubble bursts, but someone also say if the AI economic benefits materialize. Because so far they've only materialized for the people making AI chips. They most certainly have not been materialized for the customers, right? We don't know.
But the media, right? That is something that has yet to come. But the media is now writing the stories about, well, AI clearly can't deliver, a very short horizon in their discussions of this.
Yeah. I think that the ambiguity is not if AI will be a major issue. I really do believe the late 90s internet analogy is useful because I think everybody got right that the internet was going to change the world and almost everybody got wrong how it did. And they certainly got wrong what the investable parameters were. The 1990s belief about the internet was largely that those who made the plumbing of the internet were going to make all the money. And then Juno and Juniper Networks and all these broadband companies went down 99%. Cisco was the big success story of making the internet work, and it went down 80%, and today is still down 20%, 25 years later, despite growing earnings 13% per year for 25 years. And so valuation certainly matters. It's just that people were wrong on how those things were going to pencil out. The AI thing, I think the ifs are what competition will be from China, what competition from different language learning models will be with one another, and then the monetization of the efficiencies of AI. So a lot of times people say, well, David, you don't own NVIDIA, you don't own some of these big AI darlings. What happens if the AI thing is huge? And I said, the AI thing can't be huge if it isn't benefiting the 32 companies we own. For it to be huge, it has to have real life utility and application as the internet did, as the cloud did, as the digital revolution did, as the industrial revolution did across a wide array of economic actors. And so I think that will play out. I think there'll be a lot of winners and a lot of losers. And I also think some of the winners will still see their stock prices go down because of valuation.
Where are we when you're watching the shows that I so much like to disparage? Where are we, though, just at this moment in time? It is September 2025. From your perspective, the economic cycle.
The economic cycle right now, if I avoid a long-term concern about excessive government indebtedness and the downward pressure it represents on long-term real economic growth, and I just think in the shorter term, cyclically, as you're asking, I think that we're in a very vulnerable place with a lot of uncertainty, and I would not listen to any economist who answers this with hubris, because they do not know the various tug of war, the underlying strength of the labor market is really a foundational pillar on which national income, national savings, gross domestic income, obviously gross domestic product, business investment, capital investment, durable goods, a lot of these assumptions of key economic data and activity rest on top of labor market assumptions that I think are vulnerable. I believe that the tariffs are very likely to represent an economic cost that is not going to be most painfully felt in inflation. Certain things are going to see prices go higher. We've already seen it with furniture and coffee and appliances. But while everyone is sitting there looking for a political gotcha moment to say, ha ha, look at administration, inflation's higher, or ha ha, look at it's not higher, the administration told you so. It's not going to be like that. I think the bigger economic cyclical moment question is whether or not we're going to get the capital investment to feed better real economic growth, or you're going to see a decline in investment. If corporate profits decline because of tariffs, and they say, well, prices didn't go higher, companies absorbed it, but out of declining corporate profits, you get declining wage growth, declining jobs, declining capital investment. I'm sorry, nobody's going to like how that plays out.
Is capital flowing to the United States?
Very
Is there
much.
but
But that could stop very easily because it is flowing to the United States heavily. All right. Foreign ownership of U.S. public equities was about $7 trillion in 2019. It's over 16 trillion right now. Okay. So in the last 6 years, we more than doubled what it had taken 250 years to build up beforehand. Now you got to inflation adjust to make that real. But my point being, foreign appetite for U.S. bonds is still huge. Foreign appetite for U.S. equities, both public and private. There's no question foreign capital likes to come to the U.S. because of growth opportunity and because of the mobility of capital. But should foreign investment modestly decline, not even substantially, that comes at a cost to our capital markets, to our trade flows, capital flows, and ultimately to productivity.
can you quantify what the modest decline would look like? How much are we talking about?
Well, if the current account deficit, which is where it's just a mathematical equation to what foreign excess dollars are. If the current account deficit were to decline by $100 billion and we had $100 billion less, then that represents, a fraction of a point of GDP. If you were to have declining U.S. investment, declining foreign investment, and then a kind of snowball effect from her labor market, then you could risk recession. So,
Are we seeing a little of the tremors that could lead to the earthquake in the current labor numbers that we keep seeing, the layoffs that are taking place?
yes, we're seeing some of the tremors in the labor data. The answer is yes. We're not seeing what I'm describing about risk of declining foreign capital yet. We're not even seeing tremors of that yet. So now I'm trying to look around a corner, 6 months, 12 months, 18 months.
So, well, what I've always thought was the greatest benefit of the United States, the rule of law and the stability that brought about. When the U.S. government, 10% stake in Intel, that concerned me. School me if I'm wrong, because that is the kind of thing that destroys the foreigner's perception of not only can I put my capital into the country, I know I'm going to get it back. What am I missing, or what am I getting right?
Well, I agree with you 100%. I wrote a very lengthy article. I do a weekly investment commentary at dividendcafe.com. And I wrote a whole issue about separation of business and state as to why I think that Intel deal, both literally, but even worse symbolically, does represent a real concern. If it were a one-off bad deal, bad error in judgment, then perhaps it doesn't become worse. But in the immediate aftermath of that decision, they started talking about starting a sovereign wealth fund to take equity positions in other public U.S. companies.
Pick winners and losers.
And that picking of winners and losers and the way in which it will misallocate capital, I think, becomes a big concern. And that, by the way, would impede foreign investment. The attractiveness of capital is an incredibly important thing. We all intuitively know this about where we live. What makes someone say, why did you choose to pick up and come to New York City? You wanted to create a life here. There was energy here, a job market. It's a city of dreamers. And then that part kind of speaks for itself. Most people have something about the place they live that made them want to be there. And capital is the same way. There's something about where it goes that makes it want to go there. Capital has an incredibly efficient and rational process by which it finds its most efficient use.
We're going to come back to that, and we're going to pick up where we left off on New York City. I just got to ask you about Elizabeth Warren real quick. Years ago, I read her book, To Income Trap. And I quote parts of the book that I remember because my memory is going. But there were two things that jumped out at me. Is that the way our society changed, and she talked about this. So when I hear her speak publicly now, I'm like, wait a second, this is not the woman from 20 years ago, 30 years ago. That book came out in the 90s. One, that the one earner family, not the two income family, was actually better prepared for economic ups and downs than we experience right now. But she made a case, as I recall, for school vouchers, for let the dollars follow the kids, because what was happening, and it is happening, is we inflate housing prices as people move to places with good school systems. But she says in the book, again, many years ago I read it, if you let parents choose the school and they got to get the kid to the school, then you're not going to artificially inflate housing prices. So I would say, because you've written about her, you took down her potential not to become president, but the policies that she believes in. What did she forget?
Well, the first version of that book was excellent, by the way. And I say that in my book, hammering her and her policies. And she ended up, of course, being a failed candidate for the Democratic nomination. So my book was irrelevant. But I actually am very complimentary of a lot of what she said in Two Income Trap. Now, she chose in subsequent editions to take out a lot of the good stuff, including what it said about vouchers. I think getting those teacher union dollars in Massachusetts was more important. But her fundamental economic point is a reasonably indisputable one, that markets price in these realities. And when more and more households became two-income households, it basically got priced into housing and priced into automobiles, the largest ticket purchases families make. And so there was more disposable income available to pay for a mortgage and a car. And all of a sudden, car prices and house prices reflected this. It left households with less emergency dollars, less ability to respond when there was a pregnancy or a medical emergency or a decision to just be removed from the workforce. You now say we want to be a one-income family or a 1.5 income family, but you're living in a two-income society. And so that Elizabeth Warren had some economic sense to her. I think she's kind of walked away from a lot of that stuff, but particularly the point about school choice and decision-making families make and whatnot, I thought it was very cogently presented.
It was because of that much earlier version of the book. I now, again, my friends, everyone's circle of friends is crucial to your life.
Yeah, sure.
But I'm the one who says, look, I donate to my synagogue, and even my synagogue, sometimes I'm like, oh my God, I refer to it occasionally as the Marxist-Leninist synagogue of Manhattan. But hunger and education. And this brings me back to Mamdani. I think we all agree that poverty is an issue and that there are aspects of poverty that we should address as a society, because I do think we have a responsibility to one another. What in his policies, look, I'm going to be 60 soon. I just know we've seen this play out before. Rent freezes don't work. Good intention to have food outlets, but I guess the key question is, why aren't there supermarkets now in the places that you call food deserts? What's going on? Because the city's not going to encounter anything that the private market hasn't already encountered.
Well, there's a lot of basic economic questions like that people should ask, because their politicians are not going to have answers. One of the problems with government interventions into these things, I feel the same way, by the way, about, U.S. industrial policy when it comes to trade, is not only are they wrong solutions, but they prevent us from asking the right questions about what really did go wrong. When you're looking for a red herring excuse or red herring solution, you miss what is right in front of you about excessive regulation or tax burden or whatever the various causation may be. But to the extent that there is a population base in a place like New York City that wants to buy groceries, there's human needs and wants to be met, then there isn't any question about the ability of producers to meet that need. So what is the real issue? What is the challenge? And if we say, well, they need to do it at a profit margin that is making groceries too expensive, then you are more than welcome to ask, what is the greatest thing that has ever pushed prices lower? We know that price controls constrain supply and makes the problem worse, not better. And every country that's ever tried it has run into that the hard way, whether it's the US in the 1970s or Red China. It creates famines, okay? Price controls don't work. So what does bring prices down? If a company is profitably delivering a good or service, competition. That's it. Always and forever. Competition drives prices lower. And so you foster a greater market solution, not a lesser market solution, if you're actually interested in bringing prices down.
When we talk about the rent-free situation in New York City and in the 5 boroughs, I'm one of those who says, if you want to, because I do love this city, we talked about this earlier, and I'm going to ask you what you think our future is going to be if he's elected, when he's elected. I would redo the entire code. I think they should have not a constitutional convention, but maybe a New York State, New York City meeting to redo the entire state, entire city tax code to make us competitive with Florida and places that don't have state income taxes. And I'm not saying do away with it, but help us be competitive, because the question is, why would someone want to be in New York City? What is it? I know what it was that attracted me here 20 plus years ago, but why now? Because you can go anywhere in this world now.
Well, I think that there are all economics is marginal, and there are marginal considerations that are less attractive for New York now than they were. At a high level, there is a reason. People after COVID said the city was dead. And then for those of us who were here the whole time, it didn't take long to realize how wrong they were. Right. There are no shortage of young people that want to come live here. It's rather ironic to hear people say, no one wants to live here anymore. Rent is too expensive. It sounds almost like Yogi Berra's famous line about restaurants. No one goes there anymore because they're too crowded. So there are people, I remember them saying no one's going to come back to the offices in New York, right as Facebook was signing the largest office lease in New York history by Penn Station, right as Google was moving new headquarters downtown, and Amazon. So you got a lot of tech companies coming in, JP Morgan building their new mega tower right on Park Avenue. There's no shortage of finance, media, technology that wants to be in New York City. Now, marginally, you make it worse. There are a lot of people that have left over crime and tax burden. I don't think New York should take for granted its competitive positioning as a cultural, historical, financial, occupational mecca. It's the greatest city in the world, but a lot of cities have been great cities and lost their status as such. So New York does seem to have a greater resilience than some American cities, but everyone ought to be taking these burdens very seriously.
Yeah, I remember Alex Keaton from that TV show, but your Alex Keaton was my George Will, who just recently made a comment. He was on the Bill Maher program, and he was asked about Mamdani. He said, let him win. It'll, teach a lesson.
Yeah.
What do you think is the outcome? Because it looks like he's going to win. I mean, the choice is not great.
I get what George is saying entirely. I think that there is a sense in which when you can't control the outcome, there's nothing wrong at all with saying that. I believe he is likely going to win, and that George is right that sometimes, someone doing something irresponsible, you got to touch the stove a little bit to make sure you don't touch it again.
But that was de Blasio. We've been there.
Well, I think this is going to be much different than de Blasio. De Blasio was inheriting the aftermath of some pretty solid years of city leadership under then Mayor Bloomberg, who did certain things I very much disagreed with, but he was technocratically gifted. And the city was in a much stronger place in terms of quality of life. I think de Blasio came in 2014. And Bloomberg had been there from 2002 to 2014, if I remember correctly. It was a very different city that had come through the downturn after 9/11, the downturn after financial crisis, navigated well, and de Blasio did a lot of damage to the city. And then Adams took over a post-COVID and post-de Blasio city. And so you're handing over the keys right now of a much weaker vehicle to Mondani than the one that Bloomberg turned over to de Blasio.
I'm going to start to wrap up because we've taken an hour of your time and we're grateful. I heard it was a podcast about Stoicism. I think the modern world would call it mindfulness. None of the best quote out of anything is the 2005 edition of Battlestar Galactica. All of this has happened before and will happen again. But it was Thomas Aquinas, I think, was talking about the four worships or the four idols: money, power, pleasure, and they used to say honor. Today we would say fame. Of those four, which would be the one? And that it's not necessarily a bad thing. You just need to know what it is that motivates you. What's your motivation out of those four, if any?
Well, I don't believe that I think of my motivation in that construct. I think that Aquinas is right that all four of those motivations have two-sided coins. There's something very honorable or opportunistic potentially in all of them, but there's a downside as well. The ambition can be offset by greed, and honor can be offset by pride. I mean, they all carry a pro and a con, if you will. I believe what motivates me every day is my God-given capacity for productivity, that I want to be a faithful servant and make the best of what God's given me. It's very internal. I'm not at all interested in recognition from others. I'm financially blessed. I want a better life for my family. I want to leave the world a better place than I came into it. Those things motivate me more than anyone would possibly understand. But I try to focus what I can do in an area I can have an impact.
And why is it the contradiction in our society, which is we're told, or we used to be told, I don't know what young children are being told today, but work hard, build wealth, security, however you want to describe it. But we tend to always attack those who are the greatest achievers of the wealth, at least side of it. Bezos. People talk about, why does Bezos need to be a billionaire? Why does I hear it in my own family or among friends? Why does anyone need to be a billionaire? What do you say to those people? It's the income inequality discussion.
Well, I already know where it comes from, and it isn't new.
Envy?
Always.
That's what Ben Shapiro's writing about now.
Well, and Ben got it from the same place I got it, which is the Decalogue, the magnum opus of the 10 Commandments, the grand finale. 10 commandments to represent a sort of ethical system. And the 10th and final was, thou shalt not covet. And Charlie Munger famously said that people go through their lives thinking that the world runs on greed, but it doesn't run on greed, it runs on envy. And this is ultimately why I believe we have such an incredible time-honored tradition in America of building people up so we can knock them down. I understand in your heart of hearts if you just simply don't like the guy who was born on third base and thinks he hit a home run. A guy like myself who had to enter adult life basically penniless and familyless and educationless. Sometimes you gotta fight back a little bit of disdain for people that maybe had things a little easier than you did. But we're talking about hatred of self-made people now. Got people that really came from nothing, that have developed a successful life and could not have done it without, along the way, meeting a lot of needs and wants for other human beings. The way in which a Bezos, a Musk, a Zuckerberg, the Howard Schultz at Starbucks, these guys, they produced goods and services that met human needs. And I believe in an America that celebrates that, not that condemns it out of our own covetousness.
But it would seem that if envy is what motivates everything, doesn't seem like we break out of that. I mean, you look at Mamdani, he's a millionaire. His family owns a private compound in Uganda, which they guard with guns.
Sure.
And yet look what he spouts and what he's about to become the mayor of the greatest city in the world.
Well, it's a great line that Michael Bloomberg had in the rare moments he was in that Democratic primary in 2020 when he said on the debate stage, "What an incredible country we live in, that the most famous socialist in America is a multimillionaire." He's talking about Bernie Sanders.
3 houses, Bernie.
Yeah, the hypocrisy of people that disdain private property but own a lot of it is unfortunately not a very compelling argument. People aren't that concerned about fighting the oligarchy on a private jet tour. They should be, and it makes for a good little dunking on people on social media and whatnot. But ultimately, we have to win the arguments. I condone hypocrites having assets and not living the way they tell others to live. I condone them pursuing the things they pursue. I don't condone them doing so hypocritically. I don't condone them asking us to live differently than they themselves are willing to live.
You talked about this in another podcast, inequality, the income inequality discussion. And I will, at Thanksgiving this year in November, I will be at a table with middle class and upward middle class family and friends who will all bemoan income inequality. And my thought will be what you said in the podcast, which is when the tide is rising and all the boats are going up, people don't pay attention to those who are really doing well. But right now, it seems as if the tide, when I asked you about where are we in the economic cycle, is it rising or is it not rising for everybody?
Well, that's why I argue that 2008 was such a watershed moment for our culture, because trend line economic growth broke and we have not got back to it. And so to the extent that we are dealing with subpar economic growth relative to post-World War II trends, then that creates a moment of winners and losers, that the relative imbalances now stand out because of the absolute issues. Now, the question is, are those things happening because of a bad policy? Are they happening because of an inadequate redistribution? Or are they happening because of certain cultural maladies that need to be addressed? I assure you we don't have time to get into that now, but I think that that's a very important subject, and many people choose to ignore it altogether.
Last word, what is it you want to leave the folks who are watching with? What thought?
I think you asked very, very thoughtful questions. I'll leave everyone with this. When we think about these different subjects you've brought up today, from culture, ethics, economics, policy, we all do it with a standard. And everyone needs to question what their standard is by which we think about these great questions in life.